Thank you very much for joining us on this presentation on the Templeton Emerging Markets Group in India. My name is Chetan, Sehgal. I work as part of the Templeton Emerging Markets team. I've been with the firm for the last 18 years, and I look at the Templeton funds which are being sold in the market. Over the last 10 years, the emerging markets have outperformed the developed markets by a significant margin. However, of late, the emerging markets have actually underperformed some of the developed country indices. We don't think that this is a trend for the long term, as the emerging markets continue to grow at a faster pace as compared to the developed markets. However, there are some discernible trends which are appearing. Firstly, many more companies today are diversified globally as compared to what they were, say, 10 or 20 years back, which means that companies in many markets are now accessing the growth potential of the emerging markets as compared to what they used to do in the past. This also gives us opportunities to look at these companies not only from the point of view of one developed market, but from the point of view of emerging markets as well. So this trend has led to some sort of convergence in performance of the developed markets and the emerging markets, but we continue to believe that the emerging market companies will tend to show a greater growth rate over a long period of time. The rebalancing of Chinese economy as well as many of the other emerging market economies continue on a sustainable basis. As these economies grow, they need to restructure to remain competitive. We have seen that now there is a greater focus towards the local economies in many of these markets, and China has reduced its export dependency quite significantly. This has thrown up many new opportunities, and it is for us as fund managers to look at these opportunities to ensure that we find the best bargains for our clients. The Indian equities have suffered because of the high interest rates in the economy. In addition, because of issues pertaining to high leverage in many companies and the fact that the global prospects of many of the industries they cater to have not been very good, we found that many of these companies have had reduced profitability. This, we think, is a temporary phenomena, and as the companies restructure their balance sheets and the earning potential comes back, we'll find that these equities tend to do well over a long period of time. There are issues pertaining to taxation and transfer pricing, which have also resulted in some sort of uncertainty for the Indian companies. The major issue concerning India is the fact that India is heavily dependent on imports of both oil as well as gold. In fact, over half the current account imbalance is accounted for these two items. This is a big risk for India for the future, and we have to move on the path of energy self-sufficiency. India needs to change its policy environment to encourage further foreign direct investment, and as the foreign direct investment comes in and greater productivity is unleashed, we will find that the growth rates in India will start accelerating. The other issue which India must address is the issue of transfer pricing as well as issue of title rights. We think that there is a lot of litigation which is going on in the economy, because of which investor confidence is undermined, and these issues need to be addressed before India starts accelerating on its growth path again. We believe India has amongst the best potentials of all the emerging markets. This is because of the fact that India is still a very, very nascent consumer of most goods and services, and the fact that India has one of the best demographic profiles. We have a large working population, and we have very industrious entrepreneurs which are trying to tap the potential of the Indian people. With the broadband revolution, India will see a lot of knowledge being transformed and transitioned to the vast majority of people. Because of that, a lot of local entrepreneurs will emerge in the rural areas in the country, and as that entrepreneurship emerges, India will find itself having accelerated growth rates, and this is the reason why we think India will do very well over a long period of time. At Templeton, we manage two funds in India. One is Templeton India Growth Fund, which looks at Indian equities from a bottom-up perspective. And the second fund is Templeton India Equity Income Fund, which looks at both Indian equities as well as emerging market equities. Both these funds are managed under the same philosophy of value orientation, being patient and being bottom up. We think that these are excellent ways of playing the Indian story as well as the growth in emerging markets as we foresee over a long period of time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.